Tata Sons, the holding company of 31 group firms including TCS, Tata Motors and Tata Steel, has remained unlisted since its inception. But that century-old arrangement is now under serious pressure. The RBI is pushing for a mandatory listing. The Shapoorji-Pallonji Group, its second-largest shareholder, wants out. And within the Tata Trust, the charitable bodies that own two-thirds of Tata Sons, trustees are openly disagreeing with each other. Now, governance advisory firm InGovern has renewed the call, arguing that a company controlling over 25 lakh crore rupees in listed assets simply cannot continue to operate without public accountability. So what exactly is happening, and what would going public actually mean for the Tata conglomerate and its millions of shareholders? First, how does this all work? Tata Sons sits at the very top of the Tata Group pyramid, controlling 31 companies. Above it are the Tata Trusts, 13 charitable entities, 7 of which directly hold shares in Tata Sons. Together, they own 66% of the company. Then there is the Shapoorji-Pallonji Group with an 18.4% stake. Their shares are not freely transferable. They cannot sell easily, they cannot exit. The remaining roughly 12% is held by listed Tata companies themselves, locked in for over 3 decades. So what exactly is the issue around Tata Sons right now? And what does going public actually mean in this case?
We don't know the position that Tata Sons holds on listing of the holding company. Sometime back, about 2 years ago, they had wanted to withdraw their status as a large NBFC that would exempt them from listing. But right now, the situation has changed a bit, and there is infighting going on in Tata Trusts, which holds 66% in Tata Sons. So that is the issue.
Here is where the regulatory pressure comes in. In September 2022, the RBI classified Tata Sons as an upper layer NBFC, a systemically important non-banking financial company. Under RBI rules, such entities are generally expected to list within 3 years unless they receive an exemption. Tata Sons pushed back. It became debt-free in 2024 and applied for deregistration as a core investment company, hoping to sidestep the listing obligation. But the RBI has not let it off the hook. How likely is it that Tata Sons actually gets the exemption it has been seeking?
Actually, the feelers that are coming from the Reserve Bank of India right now suggest that Tata Sons may not get that exemption, and that Tata Sons will have to go for a listing, and probably RBI is going to come out with a direction very soon on that. That's what we have heard from the sources.
The Tata Trust board is divided. 2 of its 6 trustees, Venu Srinivasan and Vijay Singh, both vice chairmen of the trusts, have publicly supported listing. But Noel Tata, chairman of Tata Trust and a director on the Tata Sons board, has privately opposed it. Why did Tata Sons remain private all this while? And what does that internal dissonance mean for the listing question?
Earlier, Tata Sons did not feel the need to get listed because the leadership was the same at Tata Trusts and Tata Sons. Now it's different. Now Noel Tata is the chairman of Tata Trusts and N. Chandrasekaran is the chairman of Tata Sons. Also, Tata Trust, Noel Tata is a nominee on the board of Tata Sons, which means he has a veto power. Not just him, the other nominee director on Tata Sons, which is Venu Srinivasan, he also has a veto power in relation to any top level appointments or dismissals. So that makes it a very precarious kind of a condition for Tata Sons leadership, that you never know what is likely to come. So in that sense, if there is a listing, the governance is more transparent, and more important, the veto power that are with the trustees who are nominees on Tata Sons board, that veto power will go. That clause will have to amended.
Now this is where the story becomes important for ordinary investors. The decisions Tata Sons makes at the top directly shape the performance of these companies. But right now, those decisions happen behind closed doors. So if Tata Sons eventually lists, What changes for the company itself? And what could this mean for public shareholders invested in companies like TCS, Tata Motors and Tata Steel?
For shareholders, it's a win-win, I suppose, if Tata Sons is listed. For Tata Sons itself, one, of course, governance will be more transparent. Second, there will be a capital raising avenue from the market. That is very important, since Tata Sons is Tata Sons, not just Tata Sons, it's the various Tata entities which are getting into new age businesses, high-tech businesses, which are capital intensive businesses. So where do you get the money from? Right now, the Tata entities, whether it's Tata Digital, whether it's Air India, they are getting money from Tata Sons. But is that a feasible option going long term? No. That's what market analysts and people who know the matter say, that they will be able to raise funds from the market, which is going to be a very favorable option for Tata Sons and all the Tata entities. So listing is positive.
The Tata Group's legacy was built on trust. Now, the question is whether that trust can survive this test of time and prove itself in public. Follow Business Standard for more stories.